Today's topic is PD array. PD array means the premium and the discount arrangement. I know many of you are very confused out there. Whatever I'm showing on this channel is what I struggled with, and I have this assumption people are struggling like the way I struggled. So I made up my mind to help people out there. And a big shout out to my coach SK for doing a wonderful job on me to make this chat very simple and sweet for me. Now I'm going to show you how we can use this to get a point of entry. Using from the higher time frame, we're going to start with 1 month and we're going to come down to 15 minutes. We're going to use the mitigation block. We're going to find it on the chart: breaker block, order block, rejection block, fair value gap, liquidity void, old lows and old highs. These are our institutional reference point that we must take note of. For a rejection block, is a 3 candle sequence. The second candle is always the one that comes out with a wick. The bodies are always equal. These are the points. I'll do a video on that so you can actually understand how to locate a rejection block. Now, how do we use the PD array? That is this premium and discount arrangement for our position. We can see that market is what? Market is retracing back. External liquidity has been taken, so market is going in for internal liquidity. Is there mitigation block? No. Is there a breaker block? I can take this this candle or this one. This candle here can be taken as a breaker block because that was the last candle before the impulse move, before the market shifted structure. If I want to do, is there a rejection block? No. Is there a fair order block? We will forget that order block. Order block is here, the last candle before the impulse move. Some people will take this candle too as an order block, this one, because of the fair value gap that is there. For our fair value gap, yes, we have a fair value gap here. These are points that markets would react in, but it might take months. It might take some months for markets to get those zones to react, but it's just reminding us that from 1 month, if markets get there will be a form of reaction. On 1 week chart, what am I seeing? On 1 week chart, this is your guide. Make sure this is always following you when you're analyzing your chart. It will make the chart very sweet for you. There's a shift in market structure here, right? Market shifted structure here. I want to remove this weird Fibonacci from here. I can see market shifted structure here. You can see it, right? Now, if I take my Fibonacci from the low to the high, I'm in the discount area. If I look inside here, you will see that there is an impaired fair value gap here. Sometimes, what's in the name? I think it's inversion fair value gap, where market comes back and reacts in that fair value gap of the previous zone that did not hold this environment. Because why? Market is reacting in this fair value gap. Because market could not hold this fair value gap, it's called inversion fair value gap. Market came and reacted there over the situation here, but where we're expecting market to come and react for is here. It's here. Sorry, market buys low, right, for it to continue its movements. Where we're expecting markets to buy, look at the rule and regulation here. Is there a breaker block? No. Is there a mitigation block? I can take it as a mitigation block, but not to confuse you, I won't. Is that order block? Order block is here, the last candle before the impulse move. Is there a fair value gap? In the discount, there's no fair value gap. Don't forget discount and premium. Is there a liquidity void? No. Is there an old high or old low? No. I can take this candle, this one, that this week one here, as a mitigation block and mark here also, but I won't take that because due to lower time frame. But 1 month, market reacted in inversion fair value gap. That is here. I will do a video on inversion fair value gaps. I can try my best to explain it in a very simple way for you to understand. Sometimes it's very hard to locate, but if you're able to notice inversion fair value gap, then you're good to go. It's an inversion fair value gap, which on one day, don't forget, this should be your guide. This changed my trading entirely. Because I know market is already on inversion fair value gap, I'll be conscious, and I might believe market will still move up. I might not come down to this environment here on 1 week. This is my 1 day, which might take days to get to. Then Don't forget I gave a video on swing points. Watch that video, it's a game changer for you. There was a shift in market structure here with the body. Do you see that? Don't forget this zone is an inversion fair value gap. There was a shift in market structure here. You carry this zone here, this whole thing. This chart should be your guide. Is there a mitigation block? No. Is there a breaker block? I can mark this as my breaker block. This candle here. Is there an order block? Not to make my chart rough again. I'll delete that one. I can mark this as my order block, the last candle before the impulse move, this candle. Is there a fair value gap? If I use my discount to my premium, when you want to mark your fair value gap or liquidity void, be conscious. Use your discount and premium to note those fair value gap. I'll take this one inside here. There's also a fair value gap inside here also, because it also came out within above, meaning I'm going to buy expensive. Is there liquidity void? I can't say liquidity void. Is there old lows or old highs? I can mark this up here as my old highs, this as my old highs. So I'm done. I believe market has to come down here since I'm in the premium area. If I want to go around to the top, if I'm doing a top analysis to pick my trade on 4 hours, I'll be looking for market to retrace around this area. On 1 day, not to risk it, but also you use your confluences to enter the trade. There's a fair value gap also here. We'll delete this one here. Don't forget the one I deleted is an inversion fair value gap. Now on 1 day, because that's hit an inversion fair value gap and shifted structure, I'm expecting markets to buy. On 4 hours, I will still use my same rule. I will still use the same rule I used here. There's no difference. This is how I do a nice top analysis. I can see that here there was a shift in market structure here, right? Now if I draw my Fibonacci from the high, because I'm expecting markets to buy, it has touched an inversion fair value gap on 1 week. On 1 day it has shifted structure, so I'm expecting it to pull up more. But for those that want to enter on 15 minutes and 1 hour, we'll be looking for to counter trend it to sell. Now what am I seeing here? Is an order block here. I'm going to delete all these ones, this whole thing, not to confuse you. On 1 day, I can see that there is an order block, but order block is expensive. What do we have here again? We have what? A fair value gap, and we also have an SND. Do you know what SND? SND is a form of order block also. Order block with SND here. Is there rejection block? No. Is there liquidity void? No liquidity void. Old lows or old highs? No. So if I want to counter trend this, I'll be looking for a sell. I'll be looking for a sell. Because why? On 4 hours, I'm on the premium zone. On 1 day, I'm still bullish. So I'm waiting for markets to shift market structure. You see, market has not shifted structure on 1 hour. Do you see it? But on 4 hours, we are what? We are in the premium, so I can't even take any trade. What I'm waiting for, because I know that, I already know from my total analysis that market is bullish, but it's still high for me to buy. So I'm looking for market to shift market structure. If you want to swing trade, you can take the trade from here and look for a shift in market structure around here and enter. Market shifted structure around here. Shifted structure around here. Also, there was a shift in market structure here. I can mark this as my mitigation block. It's those that want to counter trend. But if you go down to 15 minutes, you would have entered earlier. Let me see. The market shifted here. Market shifted here for those that do counter trending and day trading. Market shifted here. Okay, it came out with a week. I can't take that there. Came out with a week. Back to one, you can take it though. There was a break of structure here. Mitigation. This is the mitigation for it to go up. Shifted. I'll take it here as my mitigation block. Go back to my 1 hour. Back to 1 hour. It's still a counter trade. You use the same rule. Is there a mitigation block? This is a mitigation block around here. For those that want to counter trend for a sell, is there a breaker block? The breaker block will be this zone here, because why? Breaker block will be this zone here, because why? Market broke structure here. This will be the breaker block. If market here break it, but this is our mitigation zone here. Is that another block? Yes, it's another block here. As long as market has not broken this zone, is another block. Is there a fair value gap? No. Is there a liquidity void? No. Old lows or old highs? No. Now, how do you get your entry? How do you get your entry? We are still what? Not to get yourself confused though. Don't take the mistake of taking a buy from here, because why? You are buying expensive. You are buying expensive. Don't make that costly mistake of taking a buy from here, because why? On a higher time frame, it's showing that you are on a premium zone, so you should be looking for sell, not buy. You should be looking for sell, not buy. Now it has touched this Fibonacci that we marked from 1D. You can take the risk since I touched Fibonacci from 1D 50% and look for a shift in market structure. For those that trade 15 minutes, you enter your trade, use the same PD array method, mitigation block. If you look inside here, there was a shift in market structure here, and there was also a shift in market structure here. There was a shift here. There was a shift here. So we have here, we have a breaker block. What again do we have? There was a fair value gap here. What again? Other block was here. There was an other block from here. Is there a rejection block? No. Liquidity void? No. You can enter from here. Some people do enter immediately after. That is for your entry. Some will enter at the closest fair value gap, which was here, and they will counter trade it. They will counter trade it, go to a higher time frame and enter. But I would advise you not to take that trade, because why? I would not take it myself. See, market is not really obeyed like that. Do you see? Market came for what? The fair value gap in here. Do you see it? Buy low, sell high. Do you see? Buy low, sell high. This or this what? This fair value gap came from 1D. I'm not scared of taking this trade, but I won't take my buy from here. Never. Why? Because I'm in the premium zone. I put my TP here, or I put my TP here. I can do that as TP1, TP2, but it's going to be a form of reaction in that area. Why? Because market shifted structure. I thought there will be a form of reaction in that area. This is how I get to know my zones that markets are going to act very, very funny, because I just follow one simple rule. Do you see it? Because I marked that zone from 1D and market hit it, and I went to a lower time frame, 15 minutes, I can check the zone on 1 hour. Even on 1 hour, if you look at it very, very well on 1 hour, without going 15 minutes to find entry, you can see that there was a shift in market structure here. Let me delete this one. There was a shift here, and what happened? This was a mitigation block, which you can take entry from if you want to use a higher stop loss. Enter the mitigation block and go. Or after the shift, mitigation block, fair value gap, you go to a lower time frame and look for a good entry. Here again, just lower your stop loss. You can see here again, there was a shift in market structure here. There was a shift in market structure here, and what happened? It came and mitigated what? The breaker block here. Do you see it? You can find good entries. You can find good entries. You can take that mitigation block, look at the environment very well, go to a lower time frame, look for where you see swing points, the market will shift in, and take your amazing entry. So use this guide whenever you're doing your total analysis from the higher time frame to the lower time frame, and I hope it will have an impact in your trading. Don't forget to subscribe to my channel, and I hope I explain this very simple way, but let this be your guide. This will tell you when to take a sell or when to take a buy, and to make your trading very, very sweet and more easier for you. Again, don't forget to subscribe, and thank you very much for watching to the end.